For taxpayers, I'll show you how paying your child through your business will save you on taxes. And for tax pros, you can do the same calculation and create a report to show your clients how much they can save by paying their kid through their business. So I'll do a quick calculation as an example, and we'll put in one child dependent, and then we'll put in self-employed income, and we're doing this to trigger the tax strategy of paying your child through your business. So we'll put in 150K as self-employment income. Now, of course, these are all sample numbers. I think I'm under the head of household filing status. But the point is, automatically, we create a baseline. We see that at $150,000 self-employment income, the federal tax bill is going to be $19,238. Okay, now let's scroll down to the tax strategy, hire your children. We'll toggle, and then we'll put in $5,000. So let's say that you pay your child through your sole proprietorship or your LLC or whatever your business is, $5,000. Well, we can go over here to this baseline and toggle to the strategic projection and see the tax bill drop. So what happens is you're reducing your taxable income by $5,000, which in turn is going to reduce your income tax bill from $19,238 to $18,038, so $1,200. So basically this taxpayer, if they pay $5,000 to their kid, now again, their kid is going to get this money tax-free. And if you have questions about that, I have a whole nother video. I'll link to it in the description, how to properly set it up. And of course, you can change this number, make it greater or less, depending on how much your child's working for you, but also it's good to keep in mind what the standard deduction is, not just on the federal level, but for the state, so that your child can not incur a tax bill of their own. Because done properly, their child will collect, or the child in this scenario is going to collect this money tax-free, and then they're going to use untaxed or non-taxable earnings to pay for their own expenses, to pay for their own sports equipment or their own clothes or shoes or going out with their friends or whatever it is. So, and then of course the business is reducing their taxable income. And so of course, let's just play this figure. Let's put in $10,000. And we see that the tax bill goes from $19,238 down to $16,838. And the child working for the business is able to have money that isn't taxed that they can apply toward their expenses. All right, let me just create a PDF report here real quick, just so you can show your client side by side paying your kid $10,000 or having your kid doing $10,000 worth of work that you pay. And this is the savings around $2,500. So this is something worth exploring. Now, there's a link to another video, and if you have questions about this, I'm happy to explain exactly how to structure this. But I hope you found it helpful, how advantageous it can be to pay your child through your business and have them pay for their own expenses. And you, as the business owner, get to reduce your taxable income, thereby reducing your income tax bill. Hope you found this helpful. Thank you for watching.